Hi guys, Lee Gettess here with the Market Sense for the week of May 22nd, 2018. The charts in this presentation are provided to us by the Trade Navigator software, which is produced by Gettess. And in looking at a weekly bond market chart here, you can see that last week took out the lows for, well, a long time actually. Kind of surprising that they took out those lows and then didn't really do much with them. A lot of times they'll find stops below those lows and start a waterfall decline, and in this case they did not do that. So you got to wonder if they might not be rebounding, kind of tested for stops and didn't find any. As I've been saying, the bonds and interest rates are reverse, and the Fed expects to continue to raise rates, but that doesn't seem to be driving bond prices down here. Of course, this week hasn't done anything. It's still an inside week. We could possibly find support down here below 140 if they get down there again, but they haven't shown any sign of trying to. 141.25 is the lower moving average right here, and that'd be kind of critical. If they hold that, then they still have the potential to turn and head lower. Although, again, I would have expected them to just do that last week once they broke. If they turn back higher instead, the middle moving average is around 142.24, and they could possibly go as high as 143.26. That's the upper moving average here, the upper red line. But they may not be doing a whole lot of anything, and we're running short of time on the June contract here. We'll be rolling to the September contract, and the future is pretty quick here. Now in stocks, we still have this great big sideways pattern sort of coming down to a megaphone pennant, whatever you want to call it. Those patterns certainly do tend to lead to breakouts, but the concern is, they could go all summer without breaking out. The volatility often shrinks in the summer, and that's a scary thing here. Last week, they did hold the support that they needed to hold to continue the trend up. They just didn't do much of anything with it. We actually wound up with the smallest weekly range for the entire year, and volatility that low tends to lead to potential breakouts the next week, but of course, this week hasn't done anything so far either. And I think that tiny range from last week really means breakouts are the way to look at this week. We'd be looking for the market to either go above 2760 or below 2688. Either of those two moves could lead to a directional move of some degree. On the downside, maybe only 40 points. Breaking 2688, there's still more support just below 2650. That's the lower moving average here, the red, where's my cursor? It's the red moving average on the bottom here. But there's really not a good reason to look at support and resistance this week. I think you have to anticipate that if there is a move this week, and that's a big if, it would tend to be of a breakout direction. It would be breaking support and resistance. So we'll be looking to go with them above 2760 or below 2688. And in the middle, well, it's just kind of a guessing game. They're just going sideways. And again, my fear, they may do that all summer. So that's what we've got for you today. I hope you can find something profitable to get yourself